Welcome to Bears in Exile. Today is October 19th, and this is the market overview. Looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. Okay, well, I didn't get to watch the market today, and the video is late because once again I was working late, so away we go anyway. And starting off with the Dow. Yes, spinning top. Just what we wanted, right? Another indecision candle. Yeah, it was down 72 points. I did get to pop in on the daily running thread and said that I was not impressed with the movement that I had, popped in and saw. But regardless, I guess it's a red candle, so be happy. But from a guppy perspective, this is not looking good for the bears. The bar is collapsing. The middle Bollinger Band is still below the short-term moving averages. Yeah, we're ending up with a little bit of sideways movement on the upper part of the short-term moving averages. Maybe even a slight downtick on some of them. But regardless, the bulls are doing very well at this point. Downtick on the CCI. Side tick on the slow stochastic, down tick on the fast stochastic, up on the 14-day moving RSI moving average, down tick on the RSI, down tick on the histogram, and uptick still on the MACD. So, why am I not happy with this? Well, yeah, for one, it's not some giant red candle that burst through the upper price consensus level. That certainly would have been nice, but really, an indecision candle, and we haven't had the hook on the slow stochastic yet, and we haven't had the hook on the MACD. Yeah, we have some encouraging signs, sloping down on the histogram and the fast stochastic and all that, but still, I really would prefer to see those two moving in agreement with the indications that we have that's agreeing with the bearish perspective. And I'm not locked into the absolutely that this is going to tank or anything like that. Nothing of the sort. I do think that it should go down, and I do believe it will go down. But I like confirmation, and certainly we have indications, but we have no confirmation, and that is not a good position to be in my opinion. SPX. Yep, another fat body spinning top, just like the Dow. It is looking good for the bulls. I mean, we're right at the halfway point of the previous candle, and textbook candle trading. The middle part of a rather decent sized candle is your first resistance or your first support, and maybe it's a little bit below the middle level. It would have been much, much better for the bears had it closed, 2/3 of the way down, or 3/4 of the way down, and it just isn't that at the moment. So, but we have our indications, and we actually did get a downtick on the slow stochastic as opposed to the side tick on the Dow. So that's encouraging, and we also have almost a side tick on the MACD. So that's better than the Dow also. The other things are all the same. But at least this one does give more indication that a real move to the downside is possible, but it is very precarious at this moment. So I'm holding no illusions that that this is doing everything that we want it to do yet. So, just to be absolutely clear. The VIX, nice day, very nice day. We cleared the previous candle by a good stretch. It is a spinning top. The bullish bar is collapsing. It looks like the middle Bollinger Band may be going in for a cross, but it is too early. We still need a couple more days to see if that happens, but if it does, that will be a tell and an indication that we are going to have our down move in the market and up move in the VIX. Certainly the stochastics are getting underway in a good way, unlike the down, the SPX. Slow stochastic getting out of oversold area and about to get the cross on the 14-day RSI moving average. If these can get all the way to the top, fantastic. That's going to be really easy to spot the next move after this one. So hoping for that, and we're going to have to see if it works out. Uptick on the CCI, uptick on the RSI, uptick on the histogram, uptick. Ooh, look at that uptick on the MACD. So this is good. This is what we want to see in the Dow and the SPX, and we are not seeing it yet. So is this foretelling what those two indexes are about to do? Very possibly. So I do like this. I do like this. And TNA. Okay, we've been saying how crappy and weak TNA is. Yesterday it barely got above the major price consensus level. Today it was rejected from it and ejected from it. Rejected and ejected. I kind of like that. Anyways, spinning top, downtick on CCI, fast stochastic, barely on slow stochastic, RSI, histogram, side tick on the MACD, uptick on the 14-day RSI moving average. If we can get a strong enough move down, it would be nice to see the 14-day RSI moving average actually make another hook. It isn't at a great angle for maintaining its upward trajectory if we were to get a good down move. So that would be nice. That would be nice, but still way too early. And if we're able to break the lower price consensus level, which is at which is at just below 37, and we'll be watching for that. Now, I do believe it is entirely possible that in the case of TNA, that it will test the floor in the near future. I am not so sure that the floor of SPX or the Dow will be tested at this time. It's still way too early. The odds for TNA doing it much greater. So that's nice. And moving on to UUP. Okay. Nice green day, got above the 200-day moving average once again. It isn't looking that great for the bears on UUP just because of the position and movement of the short-term moving averages. And certainly they could get down into the bar, work on collapsing it, and then break through. But at this moment, if we were to get another candle up, it will certainly look like a rejection from the bar after it tested it really hard. And so that's good. But certainly we have a long ways to go for the middle Bollinger Band to get across on the short-term moving averages. So that is something to consider. We are above the lower price consensus level. Still have to break through the major. Side tick on CCI. 14-day RSI still heading down and at a really good angle. So still waiting for the stochastics really to get underway. Yeah, the fast is doing pretty well, but the slow is still just meandering about, taking its time, and we really need to see it get above the 20 so that we can get a proper march above the 14-day RSI moving average. With any luck, it will both of these will get to the top or close to, and when they go on the way down to meet the 14-day RSI moving average, the 200-day will hold. So that's my theory at the moment, but we will see. Uptick on the RSI, uptick on the histogram, downtick on the MACD. It is somewhat of a mixed bag at this moment, but I do think that dollar bulls do have it in their favor at the moment. FXE, we did a special last night on FXE, right in the middle of the night, so hopefully some people watched it and it was of use to them. Did get a nice red bar today. It is not below yesterday, so that's unfortunate. So we still have to test the major price consensus level once again. And if you watch the special on FXE, you know that there's so much writing on this level. It's so important. From a guppy perspective, it's not looking so good for the bulls at the moment. Certainly, I was thinking that maybe we would get maybe a green bar. I suppose gapping up today to where it's at fulfills that enough, and having it just be red is a really good sign. Actually surprised it didn't do better, because a test and failure of the previous high would have been a really good sign. But if it wants to do this a little lower thing, I'm totally cool with that. We do have this entire level that we covered extensively last night, which is totally in play. Side tick on the CCI, waiting for the slow stochastic to really get underway. Fast stochastic getting below the 14-day RSI moving average. Slight downtick on the RSI, downtick on the histogram, still ticking up on the MACD. So I do believe that this is a accurate reflection of what's going on in the Dow and the SPX. Pretty much indecision as it whittles away at the bar. We do want a strong rejection from it, giving us a clear signal as to what the market is going to do. I do believe that we will get that over the next few days. We shall see. GLD. We're talking about the double flatline over the past couple of videos. Certainly this is a flatline. Certainly this is a flatline. No, they are not on top of one another, which is typical of a double flatline. But we also said that the bears were in a much better position for a breakdown. And, well, this is no breakdown today. It certainly is negative. The short-term moving averages are starting to point down. Granted, we do not have any separation to strengthen that opinion. But downtick on the CCI, downtick on both the stochastics. Notice the slow stochastic getting out of overbought territory. 14-day RSI moving average low. This does not move fast. So having both the stochastics go down to meet it is preferred. Downtick on the RSI, downtick on the histogram, side tick on the MACD. So certainly this would appear to be aligning for a move down. We want the 200-day moving average to hold before the stochastics get to the bottom. And that will be a perfect time, just guessing, looking into the future, where everything should be aligned for a move up. And that is somewhat of a guess, but once it reaches that point, we will look at the indicators, see what they say, and see if it confirms that prediction, which I think has a very good chance of being correct. SLV, kind of interesting. You know, we were talking about this one having room to move to the upside, unlike gold, but nonetheless, downtick on the histogram, side tick on the MACD, downtick on the RSI, downtick on both stochastics, uptick on the 14-day RSI moving average, very low, downtick on CCI. I guess this one definitely could follow gold in its movement, but I still think that this one looks better than gold at the moment. Notice the middle Bollinger Band line though, and this is a little bit of a warning. It looks like we could be getting a cross on the short-term moving averages that will be bearish, in which case the odds of going up for a test of the bar are going to fade right away. And there it is. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.